Hi, welcome back to today's morning report on Thursday, the 10th of December, with me, Richard Perry, market analyst at Tech Markets. Moving on to dollar yen, and to be honest, this is another one that I didn't see coming. The sharp dollar weakness that we saw yesterday, massive breakdown on dollar yen. I thought the technicals were sort of retracing just near term and just unwinding a bit of overstretched sort of momentum, and I thought that that was just going to renew the upside potential. But what we have seen is a sharp reversal yesterday, massive sort of acceleration through a load of support and a big breakdown. Now, you could argue that this sort of range breakdown creates a top pattern about 150 ticks if you measure the height of the range and then you measure that down from 122.20, that gives you 120.70. So that is your initial, arguably your target from the breakdown. You have had a reaction low of 121.05, so within 35 ticks of that target, and you've subsequently seen a rebound. It's a difficult one because I still think that you're going to see dollar strength coming through this chart, and I'm not a massive fan of sort of selling the dollar at this stage, and I don't think the yen is going to strengthen to that extent that we're going to see further downside. So this is the move that we saw yesterday, just gradually falling away. You saw a consolidation around this this pivot, and then suddenly we started to see significant dollar weakness, selling pressure coming through, paid virtually no regard whatsoever to that old support at 122.20. That arguably came a bit of resistance on the way back up, 22.25. So that is a key level of resistance, obviously, that old support. But again, it just fell away just significantly. Even then, you went through these old highs of 21.70, and that so I say these old highs. Let me just show you from this sort of consolidation band. You saw 21.70 was resistance for a while, so 21.70 could have become a basis of support again. Didn't. So the outlook has certainly turned. And what do you do with it? Well, you're sort of now rebounding. You could well see a rebound back towards this 122.20 mark. It's sort of building as this sort of stretched oversold momentum is unwound. However, theoretically, I suppose you'd start to think about, well, this is a big resistance now. 122.20 is your main basis of the overhead supply. So this mini recovery that we're seeing up towards 21.80, so 40 ticks below that band, could well start to find a bit of overhead pressure coming in again, overhead supply, and the selling pressure filtering through. So it's on a near-term basis, you'd say it's a negative outlook. Longer term, you're sort of more neutral again because this correction has certainly scuppered the dollar bulls control of the chart anyway near term. Whether it actually destroys it longer term or not remains to be seen. I mean, there is still a basis of support around that sort of 121 to 122 area, especially with also the 50% retracement support coming in as well. So it remains to be seen. It could well trade now between these two fib levels, 120.87 up towards 121.90. So you could see a bit of a retracement between those levels, and already that reaction high is coming into place, 121.87. To be honest, I think I need to see this chart settle down a bit before we get the overhauled reaction, because obviously after such a strong move, you get the a bit of a swing back retracement, and exactly how the outlook settles is remaining to be seen. So with that in mind, I wish you good luck in your trading today. Sorry I can't be of more help, but I will speak to you later. Thank you.